All right. We got Powell out of the way, and now it's time to roll those sleeves up and get back to work here tonight. It's about that time of day again here, folks. It's Wednesday evening. It's January 30th. My name is Joseph, and this, of course, is your nightly newsletter. You know, I help traders earn predictable, reliable, dependable profit every day in our trade room. I use a simple 3-step trading strategy, and we teach it and trade together with all of our advanced members. But tonight, my job tonight is to find the most reliable opportunities setting up for tomorrow, Thursday's trading session. And we're going to cover oil. We got some S&P, Nasdaq, gold. And don't forget about that euro. We're going to finish it up tonight on that mighty euro. Starting off this evening with oil, you know, everything here tonight is responding to my boy Powell, right? Powell coming out. We talked about this last night, right? Nobody was expecting them to raise rates. But the one thing we did see across the board today was those spikes. Right? Spike into ranges, spike into channels, spike into flag patterns. So tonight, the major theme tonight is, how do we trade the reaction to this report here today? Because whether it was the inventory report on crude or whether it was, of course, right, the Fed announcement at 2 o'clock this afternoon, we get a lot of big spikes on this chart. So how do you trade spikes? Well, one example here today, and this, of course, being on oil here, that nice strong spike up. Now, this spike up, you'll notice, is pulling back, right, into that bear channel. We're not bearish yet. And I'm going to put together a plan here to look for overshoots and breakout pullbacks on both sides of that oil for tomorrow. So stay tuned on that. Trading spikes. Now, speaking of spikes, how about the S&P? Big old spike on the S&P today, right? Not a huge surprise, right? They're kicking the can down the road, leaving rates nice and low. What's not to love if you're an S&P trader, right? So, of course, we've got 2 big levels up, but look where this spike puts us. This spike puts us into a trading range. So oil's pulling back, S&P's going sideways. You know I love my trading ranges, right? You know I love those rectangles and triangles, right? We're going to use that range to find some key support. I'm going to put together a plan here for us to buy off that low, right? Hopefully we get that buy early in the session tomorrow. Over on the Nasdaq, now don't forget the Nasdaq, right? We got some earnings tomorrow. Amazon scheduled for tomorrow. So we know the Nasdaq might be a little bit weird tomorrow, but that's not going to stop us from putting together a good plan. Nice big blast higher here on the Nasdaq. Now, Nasdaq's got a nice big spike here. Again, spike is the key word here. Are we going to go sideways? Or are we going to go hunting for that third leg, right? If we go sideways, I got a plan. If we go hunting for that third leg, I got another plan for us. I'll even put together a plan that this thing nosedives here as well. So if you like the Nasdaq, right, put your helmet on and then stick around for that Nasdaq chart tonight. Another example here over on gold, right? Again, spikes, right? That's the name of the game here. You can thank our boy Powell here for this one, right? Gold, of course. This was right off that hidden channel from last night's newsletter. If you watch last night's newsletter, boy, just straight hitting it. Anyways, bottom line is it's a nice strong run up, right? That strong run up tells me that we're probably going to get another leg up here, right? But it looks like we might be getting one of those bear channels here. So, of course, I've got a pretty good plan in this on gold, whether we go up, down, or sideways. I'm going to grab gold here in a moment. We're going to dig our heels in on gold here as well. And then how about the euro? Another big spike. Boy, I always love it when the market goes down and then right up on that pendulum swing, right up to that level of resistance. Big spike up. It's looking like we've got a bit of a flag pattern here on the chart tonight. I got 2 spots. I'm looking for those entries off a flag pattern, and we're going to break that down here right later on in tonight's video. Before we jump in, though, and put the plan together for tomorrow, though, I got to remind you, make sure you never miss a video. The most effective way to make sure you never miss a video is to head over here to our blog at sidewaysmarkets.com. I'll leave all the links in the description here on the YouTube channel, and then join our mailing list. Right? And here's your name, your first name, right? And your email address, and then hit that subscribe now button, and then make sure you check your email, because I'm going to send you a welcome email with more instructions on how to get the most of our time together. So make sure you join that mailing list, right? That way you never miss another video. And don't forget, tomorrow morning, 8 o'clock Eastern time. We'll be together in the trade room tomorrow morning. If you can't be there with me, though, the next best thing, of course, is to grab all the charts from tonight's video. It's true. All the charts that you see me piling into the video tonight, you can download those, have them ready on your computer for tomorrow. I use them all day, every day. I hope you will use them as well. There's a big button right below the video tonight on the blog that allows you to download all of those charts. And while you're down there, don't forget, if you're on YouTube right now, if you have any questions, comments, concerns, or maybe if you'd like to see me cover other ideas on my next nightly newsletter, drop me a comment below. While you're down there, hit the subscribe button, maybe the thumbs up if you find value here, right? And don't forget to forward that link to a friend as well. And if you ever want to call the office, I'm always here. And it's barely still sunny out there. Say my office here in Los Angeles, it's going to start raining cats and dogs tomorrow night. But in the meantime, though, call me in sunny Los Angeles, right? I've got a toll-free phone number in the upper right-hand corner, right? Hit that toll-free phone number, give me a call, or use that live support tool. I know that most websites are all automated chat bots these days, but I'm kind of old school. You call that number, I'm going to pick up the phone and I'll help you out however I can. Now, got that all put together here tonight. Let's get this party rolling here. Tomorrow is what? The last day of the month, Thursday, January 31st. I've been talking about this all week. What do we expect to have the end of the month? Volatility, right? Volatility. Traders take bigger risks. There's less volume, right? And of course, a lot of big trading firms, they're manipulating positions so they look good. They look good, right, on their balance sheet to give out, right, to send to clients, right? That's the big thing about the end of the month. It's a lot of trading firms are going to be balancing things, right? Closing positions, adding new positions, so they look good on the bottom number, right, for their client statements. It's all pretty much a game in the end of the month, right? Like a lot of industries do. They want to make that end of the month look good, and that leads to more volatility. Now, it's also important to remember tomorrow is not just the end of the month. We're still waiting to hear about the U.S.-Chinese trade talks right now, right? The vice premier, I can't recall what that gentleman's name is, but their vice president, right, is here in the U.S. right now negotiating with the tariff team or whatever it's called, right? Tomorrow, I would hope we're going to hear something tomorrow, and I think this could be another big leg up or a big leg back down, depending on how the markets react to that tomorrow. So if I had to guess tomorrow, outside of the Amazon earnings on Nasdaq tomorrow, I would guess getting some sort of feedback regarding the U.S.-Chinese trade talks. It sounds like they're going pretty well, but it'd be nice to get some big official statement tomorrow, maybe from the Rose Garden or something like that, right? Who knows? Who cares? But I'm sure we'll get something tomorrow, and that will probably be the next kind of hit, right, to these markets after, of course, Powell finished up here this afternoon. And then, of course, I also touched on that too, right? If you're a Nasdaq trader, we know that towards the end of the day right now, right, 4:30 Eastern time, keep your eyes open because you've got these big earnings reports. Tomorrow, of course, right, is the behemoth, right? That is Amazon. So NASDAQ, you've really got to be careful on that. So now we know kind of what's unscheduled tomorrow, right? NASDAQ earnings, U.S.-China trade talks, end of the month, right? End of the month volatility. What else is here on the schedule? We got some CPI numbers, a lot of inflation numbers early in the day tomorrow. So if you are in Asia or if you're in Europe, if you're up early in Europe, right? 2:45 Eastern time, a lot of inflation numbers. Remember, anytime we hear about inflation, right? CPI, right? Things like that, we know gold, right? So keep your eyes on gold early tomorrow morning. Then, of course, we take a hop, skip, and a jump down to that 5 a.m. We get the GDP in Italy, a very big economy in Europe, and of course that GDP flash at 5 o'clock. Keep your eyes open for those to be market moving events if you're in the London trading session. If you're joining me tomorrow, we open up at 8 o'clock Eastern time, and of course we've got a couple big news events at 8:30. We got the jobless claims number and the personal income. Personal income will definitely be something that affects gold, so keep your eye on gold tomorrow as well. And then as we scroll down, the biggest scheduled news tomorrow is probably going to be that 10 o'clock new home sales number. And I've been saying this all week. We have just seen incredible overall trading opportunities around that 10 o'clock hour. Between 9:30 and 11 o'clock, it just seems like you can set your clock on it right now. That 10 o'clock new home sales tomorrow is probably going to be one of the most reliable market moving events that we have on the calendar tomorrow. And then again, right, late in the day tomorrow, you get the Amazon report, right, coming out if you're a Nasdaq trader and if you're like a little bit of crazy in your life, right? If you're just a little bit of crazy, right, you can definitely try to trade, right, that earnings report tomorrow afternoon. So we got, of course, end of the month. We got China-US trade talks, right? We got a slew of news. Keep your eye on that 10 o'clock, right? That 10 o'clock hour. And don't forget, guys, don't forget, right? Check out that, right? If you are a NASDAQ trader, I talked about this last night, right? A simple Google search, right, of NASDAQ earnings schedule, NASDAQ earning calendar will take you right here to their website and you can peruse, right, over some of the big names. Remember, though, the key to the NASDAQ is really only a couple of these companies are going to move things around, right? The FANG stocks, right, of the world are really all you got to worry about right now because they're the ones that have the biggest market moving potential. If you want the link, just drop me a comment in the comment section below. But in the meantime, though, right, we got to get moving here because the clock is ticking and you guys, right, are busy people just like I am. So you know the news for tomorrow. Don't forget, 8 o'clock Eastern time. We're going to trade it together in the trade room. In the meantime here, let's grab some charts. Oil, S&P, NASDAQ, gold, euro. Starting off today on oil. Now, as we jump into charts, I want to talk about 3 things I look for when it comes to a spike. Remember, the word of the day today is spike. And, you know, spikes happen because of scheduled news events. They happen because of unscheduled news events. But, you know, anytime I see a spike, right? Anytime I see a spike, I always know there's probably going to be one of 3 scenarios that we're going to get. One scenario is, which is the most common, is a spike into a trading range. Right? Spike into a range. We see a range on the chart. We'll talk about that as we go. The second scenario, second most common, is going to be a spike into a channel, right? Where we see higher highs, we see higher lows. That's also very common when we see a spike. And then there's a third one. We actually have quite a few of those tonight, which is not typical, but that's just the way it goes sometimes. And that's where we see that lower, right? That lower low in price. It's not a reversal, right? It's a pullback, but it has that very distinct bear channel to it. So when I see a spike, right? When I see a spike on that chart, when I see that market spike up in one direction, what does it tell me? Follow the direction of that momentum. But this is where it always gets a little bit tricky. You've got to stay patient. When you see a market spike like this, yeah, you're right. It might come right back down, but that's highly unexpected. That's very uncommon for a market to go straight up and then straight back down. What's more common is for the market to stumble around a little bit and then give you enough information, right, to make a good decision. For example, the most common scenario is when we see a strong spike in one direction, the most common scenario is, of course, to get a spike into a range, right? That is very, very common. When I see a bull spike into a trading range, I want to use the range expansion to find the key support level, right? Find that key support level down here and then look to buy off of that key support. That's the basic fundamentals. I'm going to put more meat on this bone in a second though. But if it goes sideways into a range, we want to buy below that range. Okay, what's the next one here? If I see a bull spike and we pull back and go higher, right? This creates a spike in channel, right? We pull back, we don't go sideways, we make higher highs. If I see a spike in channel, the key to a spike in channel is to mark up the base of where that channel runs into that, right into that spike. Mark that one, mark the first pullback, and that's where I'm looking for my buy from there. Right, kind of similar to that trading range, but as you can see though, very, very different. Now, what's the third one? Right, third one was a flag. These ones are tricky. Instead of making a higher high, now what happens is we end up pulling back. Right, and what makes these very obvious is this falling resistance trend line that comes in overhead. There are 2 ways to trade this one. One is an overshoot at the low, and the second one is a breakout pullback off the high. Now there are some important things about this, right? One, you want to see sellers in off those highs, and 2, you want to see sellers fail below those lows. We're going to talk more about that here as well. So 3 different ways to trade, right? 3 different ways to trade a spike. Here we are on the crude here. big, strong move up, right? Nice, big, strong move up. Barely any pullbacks here below that moving average. And now here we are. 1, 2, 3. Find that new trend line down. That creates, right? That creates the spike into a flag, right? These are called flag patterns. If you watch some of those old school videos on YouTube, right, you'll see a lot of folks talking about flag patterns. They're not as common these days as they used to be, right? But they are definitely valid opportunities. Now, the market's bullish. Where's it trying to go right now? 1, 2, 3, right? Our big target right now is up at that measured move, up around that 55.14 and change. If it pulls back a little bit lower, market is bullish. I want to buy at support, but where can I find some support right now? All I can see right now is this falling resistance trend line coming down overhead. That's not a great place to buy right into that trend line. So I got two options to get away from that trend line. Option 1 is I overshoot. Option 2 is we use that trend line as support. So let's break this down. Let's talk about both of these scenarios. And then, of course, I'll give you some more information as far as where you can learn more about this. Keep your eyes now, right? Keep your eyes on this reversal line. Okay, that reversal line is, I love that 54 even reversal line. Strong move up, chops around, breaks out. I would love to buy right off of that reversal line. And what that does also is it gives me a shot here to overshoot this channel. 1, 2, overshoot and go. I'm looking for a strong signal just below the moving average. I'm sorry, just below that channel. That's the key here, right? I want to see them overshoot the low of that channel and a strong move back, right back into that channel. That's the trigger to buy. That obviously is the most aggressive as well. Now, what's the second option? The second option, other than the overshoot of the low of that channel, is to now use the top of this channel as a key level of support. Now, let's talk about this for a moment, because the psychology going on in that area is really, really important. Let's forward this thing through here. I've got my trend line coming down. What I want is I want to get high enough. See, a lot of people, what they do is they try to buy the pullback really tight right there. You don't want to get too aggressive buying that pullback. What you really want is you want it to go up, so that sellers up here will come in and sellers will try to sell. See this strong move down? That strong move down there is going to make those sellers think this market's turning bearish. It's not a bear market. I don't think anybody can look at this chart right now and say, oh yeah, the bears. No, the bears do not have this market right now. They do have a very strong pullback off of that high, which is not too crazy to think, because of all that bullish movement, eventually buyers will take some profit. Now, I want to try to rope in those sellers here now. I want to go up above the top of that trend line. And as it goes higher, this is where it takes a lot of discipline. You don't want to try to buy up here. I know it's going to feel very bullish, but what's happening is sellers are waiting right now to try to sell into this. They want to try to sell this and dump this thing back over again, right? And they're not going to sell low. They're going to sell high. So what's going to happen is the sellers will come in. They'll try to sell. At that point now once I see that nice strong signal coming off that trend line, that becomes the buy. Because at that point now, I know exactly where those stops are, right? The stops are hanging out right above that high, and I can blast them out, right, and run this thing up to finish off that measured move. So when I see a flag on this, right, strong move up into a bear channel, when I see a flag, it's either going to be an overshoot back up, or don't chase after it, right? It's going to be pull back, right? Pull back and go. Now, sometimes we don't get the pullback. All right. I'll be very, very honest. Sometimes we don't get that pullback. Sometimes what happens is it'll go up, right? It'll go up and it'll jump. If it jumps like that, your next best thing now is to wait for a trap, right? Wait for a trap. So if you don't get the up and over, if it goes up and goes, right? If it really gets aggressive as it goes up there, that's your sign. These buyers are hungry, and mostly it's the sellers that aren't very strong. And at that point, I'll look for that trap, right? Look for that trap here. So of course, we've talked about the overshoot, right? We've talked about the pullback, and we've talked about that trap. What are some other options here for tomorrow? Well, we talked about this earlier, but anytime a market makes a strong run, we oftentimes see a trading range, right? So if we do end up going back in and this thing stalls out inside of a range, not to worry, find that range expansion, and then we're going to use that 2-try rule, right? We're going to go 1, 2, back up in, right? Let those bears try once, let them try twice, and then we'll buy right into their failures as we go higher. So there's 2 basic components here right now. One is that flag, either get the overshoot or the breakout pullback, or, right, get the trap, right? Trap low, or again, don't forget, if we do end up going sideways here, if we get stuck around those highs, right, 1, 2, and then back up from there, 1, 2, and then we'll buy as it goes back up. Now, all this talk about pullbacks here, how does it turn bearish, right? What would a reversal look like right now? A reversal is actually pretty easy. If we go up into this battle zone and we see the market run lower, like, you know what I mean? Like big red candles lower. Yeah, that's your sign. We're done. We're done being a bull. And if that's the case here, if we get it up and then a big run lower, well, now what I'm going to do is I'm going to mark up that low. I'm going to mark up that low, find that new channel, and then we'll look to sell the top of that channel, right? That little confluence area there between the initial low, right, and the top of that hidden channel. The key is, though, right? The key is you got to be patient, because you can't try to sell that first pullback like this. It's not a bear market yet. But if those bears can take it lower, okay, now we're talking. Mark it up, and sell the high, right? Sell the high. Where's our target at that point for the bears? Back down to that 53.18, 53.25 down there, right? Around basically where the day began. Don't get me wrong. This could easily come back. A lot of this is based on news. But right now, though, we do not have enough information, right, for that to be a problem, or for that to be a factor here for tomorrow. Now, you want to learn more? Want to learn more about traps, pullbacks, flag patterns? Here's what we'll do. I'm going to drop a link up here in the upper right-hand corner right now, right? Upper right-hand corner. Grab that link for me for that free trading class. Now, as part of that free class, you'll learn all my favorite patterns, all the ways that I draw channels, because you might notice I draw trend lines and channels a lot differently than a lot of people do. So I'll teach you how to draw all the channels properly, the ranges properly, and of course, right, we'll talk about all of those entry patterns as well. So grab that link in the upper right-hand corner, and then don't forget too, there's also a big red button right below the video tonight on our blog. That will also give you a link here to register for that free trading class. So grab that free class. You'll love it. Everybody loves it. That way you'll get more detailed information about all the entry patterns that I've talked about so far. All right, over to the S&P now. S&P, right? Big blast higher, big blast higher. Now, which of the 3 scenarios are we on for the S&P? Range, right? Spikes up into a trading range. So we know we're also inside of a measured move. Right? Measured move, of course, giving us a good reason to be careful being a buyer up here. But let's dig in, though, right? Because now we know we got 1, we've got 2, and then if we go through, we've got 3. There we go, right? There's that, right? There's that next level here. That's where the bulls want to go next. Right? So buyers now want to get that 2704. I would imagine that big round number at 2700 is a nice big carrot at the end of the stick here, right, for those bulls. So we know where the buyers are trying to go here long term tomorrow, but for right now, though, they're not even close to getting that 2700, right? They are struggling here, right, with a trading range. Now, we talked about this. One of the 3 scenarios, strong move up, big spike up. We're not getting a pullback. We're not getting a higher high, right? We're seeing it go sideways. Now, what's the plan here? Here's what we're going to do. We're going to take that size of that range. We're going to copy and paste it down, find support. We're going to copy and paste it up, find resistance. Okay, that resistance is just as important as that support, right? The market is bullish. I want to buy at support, right? Where do I buy at support? Use the range, right? Use the range to find that key level of support. And then also another great level of support is this reversal line, right? I love that reversal line down here, 2667. You know me, I love reversal lines. What I like the most about that reversal line is it happened right where the news came out, right? This is pretty much right dead on 2 o'clock Eastern, right when that news came out, right? Can't see it there, can you? Right? There's your, right, 1400 EST. So that's right where the news came out right there. And a lot of times when a market has big news like we had today from Jerome Powell from the Fed, a lot of times the markets will come right back to that point almost as if it's a mulligan, right? A do-over. Let's try it again. Let's go back in and go from there. So I really like this whole area down here between, let's say, 2670 and 2663 on the S&P. We're bullish spike into a trading range. What does that tell me to do? Buy at support, right? I've got my support levels hanging out down here now. I want to buy at support. Now, what are the best ways to do that? Now, I've got a trend line on here right now. I'm going to remove this trend line here for a second. That trend line may be what we need here, but as it looks right now, though, that trend line will probably come back into play later on here in the process. Let me get rid of the trend line for just a couple seconds here right now because I want to show you something here. What's the plan if we pull back? Hopefully get a pullback here. Pullback would really make my day here. What if we pull back? If we pull back on the S&P, we're now going to use that two-try failure. Okay, the first potential pattern here, if we get that pullback here now, is the 1-2-try failure, right? We'll let those sellers try once. We'll let those sellers try twice. Once we see sellers trying once and trying twice, now we know where their stops are, and we could buy right into those stops. That's the first potential setup as we pull back. It's called a failure pattern. Once we get that failure to work, then we look for the next pattern, which is the breakout pullback. I don't chase after this move, right? You don't want to chase after this market as it's going higher. What you want to do is you want to wait for the market to pull back here for us. So again, as we go lower, it's the 1, it's the 2, it's the failure, buying right into those stops, right? Right into those stops, right as it goes above those highs, right? Right into those stops. Then it's the pullback, right? That breakout pullback pattern. It's the failure into the pullback as we go back up to retest that high. Now, there's one more potential here. One more potential. Let's say we go 1, 2, 3. Now what I can do is I can draw a trend line over that high, and I can look for what I call a two-legged pullback pattern. 1, 2, and back up. That's another valid pattern to be watching tomorrow if we get that pullback. So failure patterns, two-legged pullbacks, right? Breakout pullback patterns, right? Again, grab that free course in the upper right-hand corner. Grab that free course in the upper right-hand corner, or grab that big red button below the video tonight. Grab that free course and learn a lot more about those entry patterns, because I want to keep going and cover as much as we can here tonight, but I want to make sure I give you that deep dive into all my favorite entry patterns. Now, what if we keep going sideways here? Right? What if we keep going sideways here? What if we sit here going sideways? Then what do we do? It's still a range. And because it's still a range, we're still going to wait for it. 1, 2, failure, breakout, pullback, right back in. Capiche? Pretty easy plan if it goes sideways. Now, what if it goes higher? I talked earlier about this. It's important that you know where that resistance is. Okay, because one scenario is going to be we jump up to that range resistance, and then we see 1, 2, and a sell using what I call a nested two-try. We go up, buyers try once, buyers try twice, and then blammo, right? They collapse back down in. We're looking to sell into that second try, right? Looking to sell into that second try. So if we see this thing stall out at that range expansion, I'm not just going to sell it. I'm going to look for that chance to sell into those stop losses after they try once and twice. Now, how do they break through it? What will happen if they break through it is likely going to be a spike in channel, right? It's going to go 1, 2, 3. If that's the case, mark up that high, mark up the new channel, find the hidden channel, and look to buy the pullback, right? Look to buy that pullback. I'm always trying to wait whenever I have a range, right? I wait for it to show proof, break through the top of that range. Then once I have the 1, 2, 3, that 1, 2, 3 breakout, then I know we're good to go, and then I can look to buy that next pullback. And again, you already know that next measured move is at 27.04. That's the target for the bulls. And then what would a reversal look like? A reversal would be the exact opposite. A 1, 2, 3 reversal. Now, make no mistake about this. Anything besides a very strong run lower is going to be suspicious. So if we see a 1, 2, you know what I mean, right? If we see like this kind of slowly moving lower. No. That's not what I'm looking for. I'm talking 1, 2, bam, right? Big move down. If we get that 1, 2, 3, and it just torches right through where that news event came out today, that's going to be your sign this market is now a bear market. We're probably going to go back to where we started today, and I'm looking for a channel, right, to sell off the top of that channel. It's going to happen fast. You'll have to get aggressive on it. Don't chase after it as it goes lower, and don't even think about trying to predict that reversal, because you know how the market works, right? Yeah, the market can be crazy longer than I can afford the margin requirements to stay in a bad trade, right? I don't care how crazy you think this is overbought right now. It's not the time to start calling a top on this market. If this thing fails, right, and we return back down again, boy, we have a huge run back down to that low from today, and that could easily be the end result tomorrow. But obviously, we've got some work to do here for those bears first. S&P is looking great. How about some Nasdaq? Now, the Nasdaq looks like this guy's the Energizer Bunny right now. It looks like it's not going to stop anytime soon. At this point, it's very much a wait and see. Now, I know you don't want to hear that from me, but it's about time somebody said it to you, right? We know we're bullish here on the NASDAQ. We know we have a channel right now, but there's just not a lot on this chart. Well, there's actually one big clue on this chart. I think that's the most important clue. Well, it's actually what we haven't seen today. Pullback. I don't see any pullbacks, right? No pullbacks. I mean, yeah, you know, there's a little tiny guy there, but you know what I mean, right? We never saw that like deep pullback today, right? We never got that deep pullback today. And without that deep pullback, guess what? Everybody's going to be waiting for that tomorrow. So really at this point now, there's two basic components here. Do we keep running hot up to that next measured move? Or do we go sideways into a range? Or do we get that nice deep pullback? Wait, that was 3 scenarios, wasn't it? Yeah, we'll plan for all 3. It looks like right now, it looks like these buyers are not finished yet. And so if we're going to keep going higher here, I've got the measured move. You can see 1, 2, and 3, right? That measured move, we know where they're trying to go, up around that 68.96 on the NASDAQ. How do we get there, though? This is always where I have to remind you, sometimes these markets, they show these signs of real aggressiveness. At this point, if we keep going higher here, I'm not trying to buy the first pullback, but I will look to buy the trap, right? I will look to buy that trap. If we continue to go higher here, guys, and we're just running hot, I'm not going to chase after it. I will get a little more aggressive, and I'll look for a trap low, right? Trap patterns. Now, trap patterns are always so easy when they're combined with the low of a channel. So find a trend line and incorporate that trap low into that key level of support. Mwah! Beautiful opportunity. It's, I don't want to say guaranteed, but it's almost a guaranteed first target, volatility target, because when you combine a trap in a very strong market that hasn't reached its measured move yet, that's the key. It hasn't reached its measured move yet, right? Everybody's going to pile on, right, into that order to buy nice and low. I cover traps in extensive detail in that free course, right? Upper right-hand corner, grab that free course. You'll learn all about how I like to use traps, because traps are not perfect for every situation, but they are really great for certain scenarios. So if we don't look back, if this thing just keeps on blasting higher, yeah, trap low, trap low, trap low, and again, trying to incorporate it at the low of that channel. Second scenario, that's not second scenario. Second scenario now, we pull back, right? We pull back. If we pull back, this becomes a range now, right? So if we pull back when they open up in Asia, right? If we pull back now, this becomes a range. Okay, so if this becomes a range, if we end up pulling back here, we don't go higher, we pull back off that high, becomes a range, what do? Find that range expansion, copy and paste it down. I like to make it all cute and make it colorful for you guys, right? Take that range, copy and paste it down. Look where it lines up. Reversal line, right? Reversal line. So now we know this whole area down here is just ripe for the pickings. So if we go pulling back here now, right? We pull back, fine. 1, 2, buy back up. At that point, now we've got a range. I'm going to look for those bears to try once, look for those bears to try twice, right? And we'll buy as it goes back up into that trading range. Now, another scenario you want to consider here if we pull back is a two-legged pullback. 1, 2. Okay, don't get spooked by these. These can look very serious, right? We saw one on the S&P today. These can look really scary at first because you got this big, crazy pullback, but all that is just buyers taking profit. Now what I want to do is get back above that trend line and use it. And if you look closely at this, right, you'll see it's a 1, right? It's a 2. It's just a small variation of a 2-try failure. And again, I'm going to keep going on this, right? But take that free course and you'll know all about these 2-try failure patterns. A great free course for you. That way you can get the most out of our time, right? Together here each day. So if we go sideways, it's a 1, it's a 2, it's back up. If we go higher, right, it's a trap, right? Trap low. How do we reverse right now? How do we reverse out here? If we reverse, it's going to be a 1, 2, 3. Big run back down, right? Big run back down. Mark that low. Mark that low. Mark that high. That creates a channel. And I'll tell you right now, if this thing turns around, right, we now have a big target, right, all the way back down into this area here where that range was, down around that 6,700, 6,680 area. So could be a party for the downside tomorrow, right, if these bears can take control. But as of right now, though, my gut tells me we're going to probably go sideways here eventually tomorrow. You know, don't be afraid too if we see that move up, right, into that measured move. We may find the range up top tomorrow. Right? If that's the case, if we get a range up top tomorrow, you know the drill, right? Find that range expansion, 1, 2, and back up we go from there. Way too bullish right now to try calling this as a top right now. If it keeps running hot, we know where it's going. And make sure you don't forget tomorrow, we got more earnings reports tomorrow on that Nasdaq. It is your responsibility to check that website I talked about earlier and make sure you know when and where those earnings reports are coming out for tomorrow. Over on the gold tonight, boy, I'll tell you, I love me some gold right now. Gold, as I said, I warned you guys last night, right? Gold is notoriously one of the most difficult markets during a Fed day. It was pretty choppy and sloppy here today, but bottom line is what we got here. Rollover, right? Don't forget, we talked about that last night. This is the 419 contract on NinjaTrader. Don't forget, don't do the merge on NinjaTrader. We'll talk about that tomorrow in the trade room. Rollover reminder on the gold here. What do we got here? 3 big clues. 1 clue, big bull momentum, right? I mean, just obvious bullish momentum here right now. Second big clue, is it a range? Is it a flag? It kind of looks like we're getting a bit of a flag here right now, right? So what does the flag tell me? Flag tells me up, over, and go, right? Now, that probably going to be a little difficult. Let's put this together here right now. The third clue is this, right, is reversal line. That reversal line is another great spot here at 1320.8. So 3 big clues here. I think we're going to probably see this as a flag. So we'll draw that down. We'll bring this over. Yep, looks like a flag to me, guys. Now, here's the deal, though. This is one of those somewhat rare types of very sharp flags, right? You know, you're going to see times where the market will rally higher, and then you'll get this nice, easy, you know, very flat, almost horizontal flag here. And you can, in those situations, you can easily get the overshoot into that breakout pullback. But when the flag is a little bit steeper, like we're seeing right now on gold, it's going to be a lot more bearish when we hit that low there. So here's how I would trade that, right? If we get this pullback right now, right? If we get this pullback and it runs back down, at this point, what I'm going to look for is I'm going to look for a very specific variation of this pattern. Again, we've got that reversal line here at 1320. Right? But because that market will be in such a nosedive, right, as it goes lower to it, what I'll look for is that nested 2-try. Nested 2-tries are great variations of your typical major 2-tries. And again, you'll learn a lot more about that by taking that free trading class in the upper right-hand corner. But basically, when the momentum swings like that, I'm not just going to blindly buy it. I'll wait for 1. I'll wait for 2. Right? 1 and 2, and then I'll buy after that second try. right? It's a nested 2 try. It's kind of an inside second try there. We'll talk about that more tomorrow once we see it. So if you're with me tomorrow in the trade room tomorrow. And then again, remember, sometimes these flags don't pull back, right? Sometimes they pull back and run. If we do get that run, find that trap, right? And look for that trap pattern. So 2 things you want to think about here for gold is going to be 1, the breakout pullback off the flag. Again, careful trying to buy that. I'm going to wait for the 1, the 2, and then look to buy after I see that 2 try failure, the nested 2 try. You can try to get it off that, but it will usually be pretty intense, right? You'll be trying to pick that bottom pretty significantly there. I'm going to look for that better signal, right, as we go higher from there. If it does run up and keep going, stay patient, don't chase. Look for that trap here, right, as we go. Now, something you really want to be careful about, right? I talked this earlier, right? Is it a range? And the reason why I say that is because every once in a while, you don't quite have enough information to really put it all together. For example, what if we just run back up and then bounce off that high? What happens then? Well, then it's a range, right? Then what do? We find that range like that, right? We still wait for that 1, that 2, and we're back up again. 1, 2, and we're buying back up into that trading range. So this could easily down, up, bounce, right? You could easily be buying off of that low, and then seeing the top form, that double top gives you a range, 1, 2, and you're buying back up again. This could really get good here, right, on that gold. Now, another important thing that I want you to keep in mind too is that we haven't reached that measured move yet. Right? That 1, 2. Now, I know what you're thinking right now. If you're a client of mine, wait a second, Joe. I know you don't like to draw measured moves without the pullback to the moving average. And you're right. But the reality is this is the news response right there, right? That's the initial, right, bam, off the Fed announcement today. So that number, right, that becomes the measure, what's called in price action trading, the measuring spike. Right? It's called the measuring spike, right? It's that first spike. I know it doesn't pull back to the moving average, right? But that's where logically your next level of resistance is going to be. And this is very, very important because as we look above this chart here now, right? I don't want to try to buy up here. This is not the place to be buying up here, right? This is really a kind of a no trade zone up here. However, if we blow through this now, right? If we blow right through it and run through it, now we look for that spike in channel, and then we can look to buy off the low of that spike in channel. Now, spike in channels have a tendency to kind of break off into fractals. You know, fractals, that term they use with technical analysis. And what I mean by that is that if I can kind of keep going here a little bit, let's clean this up a little bit here, though. You know where those arrows are, right? So if we see it 1, 2, go, right? And this thing just blows through that measured move. That's great. I'm going to find that new channel, but let's be honest, right? We may not get that deep pullback, right? I mean, we may not get that deep pullback. Okay? So we may not get the pullback. So what you want to see is do we see this break off into another spike in channel? It oftentimes does. And in that case, another spike, right? There's spike in channel, mark up those 2 highs, find that low, and then watch that buy right off of that channel low. Okay, these will happen relatively quickly, and the trick is that once you see this up, back, go, right? Once you see this thing up, back, go, once you see that big strong spike, again, we'll look for that bigger channel, but just keep your eyes on that smaller spike now. Once you see that higher high, yeah, then you know, find that channel and buy off that channel from there. All right, guys? And then from there, right, it'll be 1 leg, right, 2 leg, and then up and 3 leg, right? With that triple measured move, use that first one. There's your second one. If we end up blasting higher and pulling back, use that, right? Use that same one. Use that as your third one, right? So wait to go through the measured move, then use the same pullback, right? The same legs for that triple measured move. We'll walk this through together tomorrow. Last but not least, how do we turn bearish? What does a bear market look like? Well, we'll have to see it go up and then collapse, right? That's what a bear market look like. I would imagine it'll be right up around these highs. We'll see it go back up and go. If this thing dumps over, fine by me. Not what I'm expecting, but if we do get it, we'll find that new channel and sell off the top of that channel, right? Relatively easy plan here. And that's a great example of why I don't buy high, right? You don't buy high. If it wants to go and pull back, we'll buy it. If it wants to run and keep going, then we can look to buy relatively high, right? But I'm not going to buy up here, though. I don't want to buy up here because, like I said before, right, get those flag sellers in on it, right? And then we can run them right out. All right, great plan there on the gold. Wrapping up here on the euro. Let's get this euro going here. Let's get this euro going here to wrap up here with you guys here tonight. Get you guys out of here. 3 big clues on this euro. Very similar here to gold, as you can see. Very similar here, right, on the euro as to gold. And of course, the big thing right now is with that big spike up, right? Big spike up. 1 of 3 scenarios, right? Is it a spike in channel? No. Is it a spike in range? Nah. Doesn't look like a spike in range right now. What does it look like? It looks like a flag pattern. Yeah, looks like a flag. So we get a strong spike up right into that flag. What's the plan? Get up, get over, and buy it. Now remember, as we dig into this, right, remember, you're going to have sellers waiting just overhead, right? So as we go up, you're going to have sellers that will come in just like we talked about last night, right? You've got to anticipate the opposite side of that market, right? Those bears, they're going to come in trying to call that top. Let them do that. Then you know where their stops are, and then we can look for that jump right back up, right? We can buy off of that support trend line. So find that level of resistance there, right? We want to wait for them now, get up. Let's put that line right there again, right? Let them get up, let them try to sell off it, and we'll buy, right, once we come off that trend line. Or, right, you can wait for that little bit more reliable trade, which is the 1, the 2, that nested, right? You get the 2-legged pullback, right? The flag pullback. Then from there, it's the 1, it's the 2, right? It's that 2-try failure, that nested failure. Those are 2 easy patterns because, again, all those sellers are going to be already in, and their stops are going to be sitting ducks to run back up, right, and retest that high. As far as the target goes for that euro, let's measure it up, right? I've got that big, strong leg number 1, right? Big, strong leg number 1, strong leg number 2, right? Pretty symmetrical. You got it. Strong leg number 3, right? So measure that first move up. That takes me to the second leg up. Those look beautiful. My third leg now, same distance, right? Same distance as that first one. Very, very easy there. Now, also, don't forget, if we do roll up and then bounce off of that high, right? Don't forget, this could easily become a trading range. So if we do see it down, up, and then pull back, watch those double tops. If we see a double top on the chart, what do? We call it a range. How do we trade a range? We take that range, we copy and paste it down. Oh, looky. I got that reversal line right there, right? Beautiful reversal line just below that big round number, right? I would love to get a nice 1, 2 and buy off of that low. That obviously will come later in the session tomorrow, but stay patient for it because just as we saw on gold today, right? It's waiting patiently. You know, trading is a lot like fishing. Right? We go the right time of the year. We look in the right locations. We put our lines in the water and we wait, right? You can't force the fish to bite. Just you can't force these patterns set up. Got to wait patiently for those patterns. So again, it's a flag pattern, right? Possibly a range pattern. And then what would it look like here, guys, for a break higher? Up, back, up. Again, you can find that new hidden channel here and then buy off of that low. But don't be surprised, though, if it runs, goes, and turns into a smaller fractal spiking channel, and we can look for it right there as well. Right? I love those spiking channels. Just going to wait to get that proof. Be very careful buying high there on that euro. And then remember, a reversal is pretty easy. It'll go up and literally collapse. Or maybe it goes up, holds, and goes. Whatever the case may be, though, wait for the market to literally completely collapse. Wait for it because you've got so much bullishness here. As this market pulls back, right, to where that news came out, a lot of people are going to be trying to buy that pullback here because they're going to feel like they missed out on the opportunity there. So be very careful with just a pullback here. Make it pull back, make it go. Then we can find that new low find that new channel, and then we can sell off of that channel. Again, I'm going to go into a whole lot more detail about all the patterns, the flags, the ranges, right? All these tools that we use inside that free trading course. It's in the upper right-hand corner here on our YouTube channel, or if you're on the blog, it's that big red button right below that video. And then, of course, tomorrow, don't forget, 8 o'clock Eastern time. We're going to do this tomorrow together with all of our advanced members. Hope to see you guys there with me. Don't forget, we open up every morning at 8 o'clock Eastern time. The first thing we do every morning is we go through all of our rules, all of our patterns, that we all know what we're looking for, and then we check off our rules to pre-qualify the winners and disqualify the losers. There's really no better place to learn and earn. And don't forget, we get a great free trial. As part of that free trial, you get an invite to join us in the trade room as a guest. It also includes our free trading class. I'll put all the links in the description of the YouTube video. And don't forget, you can always use live support. You can always pick up the phone and call that toll-free phone number. And you can always learn more about our beginner, intermediate, and advanced classes. Don't be a stranger, guys. If I don't see you tomorrow morning in the trade room, I look forward to seeing you guys, right? Calling the phone number, sending me an email, or dropping me a comment in the comment section below. And as always, be well out there. Be nice to each other, will ya? And be here next time. Adios, amigos. Bye-bye for now.